What's going on, guys? It's your boy Jermane'S, your host and the most. Please like, comment, share, and subscribe to the video. And today live, we're gonna do something a bit different. By the way, today is Monday, July 27th, 2026. Man, the year is going so fast. It's unbelievable. It's a scorching July day here in the Northeast, where I'm from, where I'm living, where I'm residing, you know, and I have to give thanks for this new day, all right? But we're gonna do something a bit different today. Um, what's going on in the market, guys? The market is printing for a lot of people, and a few of us can say the market is down, but from a macroeconomic point of view, things are chopping. So this Iran war is overshadowing the economy by a whole lot, and we all know that. This minute gas prices are up, next minute gas prices are down a little bit, vice versa. You know, and it's also causing a squeeze on goods and services as it relates to goods and services prices going up because oil is the lifeline of the economy, and interest rates are tethering up as well. The 10-year yield is up, and it's been up over 4.50 for a while now. And everything is just chopping and going sideways. The spikes. It's highly volatile. It's highly volatile. We are now in earnings season. Tesla just report earnings, and they missed. I think they missed on revenue, but they beat on earnings, and that goes to show what's really going on. Um, they expand their margins because if they miss on revenue and beat on earnings, that means with the little revenue they got, they'll make use of it. So they're expanding their margins and stuff like that. Most of the Mag 7, Apple, Microsoft, Nvidia, Meta, they're going to report sometime this week. Um, we are highly anticipating that they're going to continue with this massive AI build out and this AI spend. I think Google just reported too, and Google, they have somewhat of a commitment to still continue with their AI strategy built out and the AI plan. So I think the rest of the Mag 7s, with the exception of Apple, because Apple didn't really start doing anything related to spending money on capex on their AI built out. I think Apple is just going to license AI, some other company AI, as they sign contracts with Google and OpenAI to do so. But a lot of people, a lot of economists are expecting. And before I get into this, I just want to read my disclaimer as well. This is not financial advice, and this is just for informational purposes only. So I'm not advising anyone on the financial markets. This is just informational purposes only. So what I'm about to say is that traders, investment analysts, and Wall Street alike are looking to see what the rest of the Mag 7 crew is going to do as it relates to capex spending and how they're building out the AI infrastructure, so on and so forth. We're looking to see Microsoft, we're looking to see Meta, what they're going to say, because I truly believe, if it wasn't for the massive AI spending that these companies are doing, that is trickling down within the economy in some way, shape, or form, the economy would be in deep trouble right now as it relates to jobs and laying off, and maybe not a deep recession, but we probably would be in a recession, because guess what? Oil prices are up, and when oil prices are up, it have a domino effect on the and goods and services. And when goods and services prices are up, and people can't buy goods and services, then these places that produce the goods and services are gonna stop hiring because they're not getting any business. So if it wasn't for the AI mega spend and the AI capex spend that these Mag 7 companies are doing as it relates to expanding their AI infrastructure and their AI build out, the economy would be in trouble at a greater extent. And so Wall Street is actively looking to hear or even to get just an idea if the spending is going to continue. And two things. If it continues, then the music keep playing and then you keep dancing. Just keep dancing while the music plays. Second thing, if they are complaining and and give the slightest idea or the slightest hint that they might pull back on some of this AI spend, then the market might catch a fit and might start to pull back significantly. Coupled with oil prices going up, people would probably try to embrace these energy companies more and try to get in there. But the market is very choppy, and it's just a waiting game to get a clear picture of what direction the market is going in. Inflation. So a lot of people, the word inflation is kind of, not everyone look at inflation the same way, because now we're having an energy-driven inflation than anything else, and other times we might have like a economic slowdown inflation. Now this inflation we're facing, we would say, is not really an inflation of the normal system. This is like, excuse me, this is like self-inflicted, for lack of a better term, because we went into Iran and we started this military operation knowingly. Well, not knowingly, because we didn't think Iran would do the things they are currently doing, attacking their neighbors, mining the Strait of Hormuz with God knows what type of traps they're setting in that strait. And also they're attacking their neighbors. And they're not only attacking their neighbors, civilian population and civilian area, but they're also attacking their neighbors' energy infrastructure, like oil tanks and oil pipelines and natural gas pipelines, so on and so forth. So we didn't anticipate none of that to be happening. But Iran really tricked us, and it's having a significant impact on the market as we speak. It's as Iran and the United States entered into a peace deal of some sort, or a deal to really explore a peace deal of some sort a few weeks ago, and they a while now they entered into that agreement. However, a few weeks ago the agreement was null and void because Iran attacked a container vessel in the Strait of Hormuz, and Iran is claiming that the vessel didn't have any right of passage. So you see the fragile situation I'm talking about. So they're saying the vessel didn't have any right of passage, and people on that vessel got hurt. Some people even passed away from the attacks on the vessel. So I say that to say this: we continue to live in a very hostile environment as it relates to affordability and cost, because the hostility in Iran and neighboring countries, a matter of fact, play a significant role on how the Western world operates. You understand? And Iran know this. I think that's the only ace in this game right now. That's the only leverage they have is the Strait of Hormuz, and how they can disrupt the Strait of Hormuz and cause the world pain instead of inflicting pain on their enemies. So Iran has no intention of her harming the United States. Well, they do, but they can't act upon it. And they know that, you know, they can't act upon bombing and getting close to homeland. So what they do is they use the little leverage they have as it relates to blocking the strait, as it relates to blocking the strait, sorry, as it relates to mining the strait and attacking any commercial vessels transiting through that strait. So you see what I'm talking about? You see what I'm talking about? And when that happens, the market respond in a wild fashion. Yes. Um, this week coming up, in a few days coming up, there's gonna be an earnings call from a very, I rather say, a very controversial company. And the controversy behind the company is not anything um, to be worried about. Is that the company stocks trade so volatile. The company is one of those companies to have one of the first um, U.S. stablecoins in the country from a chartered bank, and they tends to help students, workers, everyone alike within the economy, and they do it in a very technological and efficient manner. So the company I'm talking about today is SoFi. So SoFi gonna report on the 29th, and SoFi been down year to date, way down year to date. So we're gonna see what happened when they report on the 29th. Traders already putting in their bets, man, because this company has been down for so long and for so much that any bounce could actually trigger a short squeeze and could actually get you in deep shit if you're on the wrong side of the trade. So traders are anticipating a big move, and you know, I'm not sure what institutional money is going to do, but I'll assume they're probably buying long-term leaps, long-term equity positions. I could assume they'd be doing that right now, institution, because um, as I said, the stock has been beaten down, way down for a while now. Been beaten down like crazy for a while now, and it's just time for a rebound. Time for a rebound. A lot of companies have been beaten down like crazy. SoFi is one of them. Nubank is one of them as well. Um, but these are potential companies with a whole lot of potential. Walmart has taken a beating recently from its high. Um, who else? Walmart, Copart. Copart is one of them too. Have taken a beating um, over the past year, man. Nothing but going down, going down, going down. It's like a chart flipped over. Copart just be going down, going down, going down, going down, going down, nonstop. You know what I'm saying? So we're looking for some of these companies to rebound um, anytime soon. Um, yeah, looking for them to rebound anytime soon because and reverse back to the mean. That's what it's all about. What was I about to say again? Apple. Apple makes all-time high today. I think it's like 338. Don't quote me. Gotta look it up. But Apple make an all-time high today. And it's funny because Apple is not one of them who's spending the whole shitload of money on AI infrastructure, AI built out, etc., etc. AI is just, um, I'm saying Apple is just licensing um, these companies AI products. I thought Apple was gonna buy Perplexity or one of those smaller AI LLM startup. I did believe that Apple was gonna do that a while now, but they did not do it. And they're gonna use Google Gemini to power Siri. So we shall see, man. We shall see what happens. But anyways, um, yeah, the market is just chopping, man. It's always better to be in the market, or better to be have time in the market than time in the market. You cannot really time the market because I don't know anyone. I don't think anyone knows anyone who have done that successfully. Time in the market, time in place, but you could also follow the math, follow the algorithm behind the market. The math and the algorithm is the most important things within this market. Got to follow those and follow the big money, what the big money is doing. You know what I mean? So, it's your boy Jermane'S Views. Please remember like, comment, share, and subscribe. Um, just my thoughts and idea on what's going on in the market. I'm here in the mobile studio, just telling you what's going on from our perspective. This is not investment advice. I'm not a licensed investment professional. This is just my thoughts and ideas. Dig? All right, so see you guys next time.